Foreclosure rates are on the rise across the country, and Florida is one of the states leading the way. A US Foreclosure Market Report from Attom shows that about 1 in every 2,500 Florida housing units have a foreclosure filing. That's a 5% increase compared to August of last year. Our state ranked third behind only Nevada and South Carolina in foreclosure rates. Are these numbers just the market correcting itself, like some experts believe, or a growing concern for housing in Florida? To learn more, we're joined now by Tom Hudson, Senior Economics Editor with WLRN. Welcome, Tom. Thanks for joining us.
Great to be back with you. Thanks for the invitation.
So looking at this Attom report that looked at the foreclosure rates, 18% higher than they were 1 year ago nationwide. It specifically looked at Lakeland, Ocala, and Cape Coral, some of the worst foreclosure rates in Florida. Why do we think we're seeing an increase?
Well, I think there's three pressures that homeowners are experiencing. One is the cost of insurance. Homeowners insurance obviously remains incredibly high in Florida. The rate of growth has calmed down from just a few recent years ago, but it still is very, very expensive to insure a home in Florida. The second reason, property taxes. As property taxes have increased thanks to the underlying value of our real estate, the amount owed by property owners has increased, and we know that the state legislature and the Republicans and Governor DeSantis really want to go after local property taxes in the next legislative session. And I think the third reason here, in 2025, we are in a mortgage market which is much different than 5 years ago. So for home buyers or folks that refinance their mortgages in 2020, and have 5-year adjustable rate mortgages, those mortgages are coming due. They need to refinance, and they're experiencing much higher borrowing costs than they had just 5 years ago. And that adds to the total cost of carry of a home between insurance, taxes, and for those with adjustable rate mortgages coming due, now a much more expensive mortgage and a much higher monthly mortgage that they have to come up with.
Are the numbers concerning, these increases in foreclosures?
Certainly, the double-digit increase year over year is attention-grabbing, but it is coming from a pretty low base. We're far, far from the days of 2006, 2007, 2008. Any single foreclosure is a possible tragedy for the family or the individual that's affected by it, certainly, no doubt about it. And the increase that we're seeing is, again, attention-grabbing, but it's coming from such a low base and coming at a time where we know the housing market overall in Florida has hit, shall we diplomatically call it, a soft spot right now.
So realtors have said this is essentially a course correction on some of the prices that we're seeing. Would you call this a course correction, or I'll say, concerns about where the health is of our housing market?
I'm always a little allergic to the term correction when it comes to a market standard, because correction implies that somehow the market is wrong. The market is the market. The price is the price. It's not right or wrong. It is what buyers and sellers have agreed upon, what the price of an asset is. It's either a stock or a bond, or in the case of Florida real estate, a house or a condominium. And you're seeing, particularly in Southwest Florida, which saw a significant boom in prices during coronavirus and a building boom. So supplies increased, demand has retrenched, so there's fewer buyers, and the buyers that are there are competing for more properties. That is going to lead, naturally, Economics 101, supply and demand, into prices probably moving lower. And we've experienced that in Cape Coral. The volume of sales has dropped only by about 0.5% year over year for single family homes, but the median price is down by 5.5%. Condominiums in the Cape Coral area, those sales are down 8% in the pace of sales. The number of condominiums sold in the last month compared to a year ago, down 8%, but the price of those condominiums down 12%. So we're seeing that really reflected here in fewer sales and prices moving lower because demand is softer.
So I've been seeing on social media some folks comparing this to the 2008 housing market crash. You've said there is that comparison is just not reasonable, correct?
Not only not reasonable, it is just wrong. There is an old phrase that historians use and economists use, investors use, that history rhymes, it does not repeat. That certainly is the case here with the housing market. There's some notes that may rhyme with the 2006, 7, and 8 housing crash, but we are far from repeating that. Remember the ninja loans, right? Those were no income loans back in 2005, 6, 7. If you had a heartbeat, you could get a mortgage for a Florida condominium or a Florida house back in 2004 and 5. That's certainly not the case now. Homeowners, condominium owners have much more equity, so ownership stake in their properties, and so that allows them a bit more of a safety, financial safety cushion. Additionally, while we have seen growth in some markets like Cape Coral, Fort Myers, we've seen some building, we haven't seen the boom of supply that has kept pace with the population growth that the state really experienced during the coronavirus and in the months and few years immediately after the pandemic.
Tom, if I can end with this, Governor Ron DeSantis has been pretty adamant that the state should eliminate property taxes. Do you think that would be a game changer for the housing industry here in the state of Florida?
Yeah, I think it would. Whether or not it makes economic sense is an important question to be asked here, because where are the local governments going to be getting the funds to provide the services that those homeowners and condominium owners have come to rely on? That is an open question at this point. I think the other piece in this debate over the financial number of property taxes that oftentimes gets ignored is the formula that comes up with property taxes. It's not just the tax bill that homeowners have to pay. That bill is going up because of the function of two pieces. One is the millage rate, the tax rate, so you want to pay attention to that, but also the underlying value of the property. So the tax rate could stay the same, but if the value of the property is increasing, guess what? Your tax bill is going to increase as well. So while legislators can affect the millage rate and can affect the tax number that homeowners are required to pay, they have less of a direct influence on the underlying value. That being said, there can be rules and regulations that can really affect that underlying value, and we've seen that time and time again in economic cycles here in Florida.
Tom Hudson, we always appreciate your insight. Thank you so much.
My pleasure. Thank you.
Thank you. Thanks for watching. We've got more great content for you, from news to the arts to the environment. So be sure to like and subscribe to WGCU's YouTube channel and follow us on our social media platforms for the stories that matter to you.